Hello, everyone. Great to have you here. My name is Becky Flint. I am currently the founder and CEO of Dragonboat. Prior to starting Dragonboat, I've been in the fintech industry for almost 20 years. It's a long time. I'm aging myself. So my experience in fintech is something really near dear to my experience and to the space that I'm passionate about. My experience in fintech is multi-pronged. I joined PayPal in its very, very early days and led its international global expansion program. And as PayPal scaling, we started facing challenges of a scaling company. So I built its first product portfolio management across the PayPal. And later on, I also helped build the PayPal's acquisition and integrate Bill Me Later and buy now, pay later. Now it's a big thing now, but in the days it was really early, so I had the credit portfolio into the PayPal. My second direct involvement in a fintech company was a company called Fintech. When I joined, it was a fairly small company, really early, and it helped build its first product team and ultimately the portfolio management. And now it is a thriving, leading AI fraud prevention unicorn. In addition to directly involved in some of the amazing fintech companies, I also, through my consulting, through my coaching, and witness and partner with lots of colleagues coming out of fintech space, I've seen the rise and sometimes the falls of dozens of fintech companies directly, and some of them really led into multi-billion unicorns. So very interesting to see and observe how the fintech companies evolve similarly, but very differently in some ways. And then the third but not least is through Dragonboat, we have many customers in the fintech space globally of all sizes. So that really led to some of the observation and this conversation around fintech and the unique part of the fintech companies, as well as how they evolve and be successful. So what is the big differences of fintech? It is very hard to scale. So a couple of things that we can look at are complex product. So many different users and segments and types of use cases. And it's facing lots of legal regulatory requirements. And that's shifting, not just one. And it's different in different markets you operate. And by default, almost all fintech companies operate in a global environment. Your users, the customers could come from anywhere. And then fintech also, almost all fintech companies have a strong dependency of some sort on third-party external vendors and for key capabilities. And often, they could be their competitors. And the fierce competition of a fintech, it's easy to start, it's hard to scale. Every fintech company faces fierce competition from existing traditional financial institutions, the fellow fintech companies, newcomers, the customers sometimes become competitors, and global competitors, obviously, and the last but not least, the fintech is a very thin margin business. Therefore, as it's scaling, that either you need tons of capital, or you have to find ways to really thrive in that environment once you find early product market fit. So that really leads to something where we also observe the key strategies for fintech success. Obviously, there are more than that, but a couple of things to highlight. One is to try to reach ubiquity as early as you can. Even that means a small part of the product. So some example we can look at is, I don't know, some of you remember the company Square, now it's called Block. Back in the days, it's called a Square. And it has it started with a dongle where you can use it with your phones and accept payments everywhere. And they really just doubled down and it become everywhere so that It's something that are on top of the mind of their target customer, which is SMB, small merchants, and then be able to really expand adoption from there. Now, obviously, once you have ubiquity of some level, you have to say, how do I improve the adoption? How do I get the customers, the merchants to use our product more frequently? So use case expansion will be immediate focus after the ubiquity. Now, also say without ubiquity, it is very difficult for fintech to succeed. Personal story at PayPal where we launched a big initiative to have PayPal to be accepted in stores. Even at the later stage of PayPal, we had everywhere online. It was very challenging to make that product successful because it wasn't ubiquitous in the place where people can use it. So ubiquity and use case expansion really have to come together immediately one after the other. Now, because of thin margin business, obviously, so how do we boost margin is a way to scale, unless you have an infinite amount of funding, and the boost margin is something really important now that makes fintech product managers very unique, that many of them are very, very business savvy and in the way that to operate. So I'm happy to share some of the story down the road in the future slides. And last but not least is that almost every scaling successful fintech companies go through partnership and M&A. So that means operating fintech is complex. And so we want to cover a little bit of how do we take that winning strategies down the road. So one of the interesting example, kind of touched upon a little bit earlier, is that reaching ubiquity is very important for the first early success of a fintech company. But at one point, you have to move on to new use case expansions, which means your strategy and the focus at different phase of the product, of your business life cycle and the product life cycle has to change. So earlier days, PayPal's main focus is thrive on eBay, be everywhere. And our roadmap focus was trying to be, capture as much as the market share and the payment volume on eBay as possible. So that was the early phase in 2003, 4, all the way to 6 and 8. And that strategy really led to a huge growth of the PayPal back in the days that eBay account for 75% of the PayPal revenue. And the PayPal was growing, right? If we stay in that strategy, ubiquitous strategy on eBay, we could have just missed the whole growth down the road, which was a very savvy product manager asked a question on, hey, for every merchant selling on eBay, there are hundreds not. What if we build the business for that merchant? And that's really the start of the PayPal Merchant Services back in the days called Off eBay. And that really led to a huge growth of the PayPal business. And in 2006, eBay account for more than 75% of the PayPal revenue. By the time in 2018, eBay only account less than 15% of the PayPal revenue. And ultimately, PayPal, a couple of years back in 2018, ultimately eBay and PayPal split. eBay dropped the PayPal as preferred or almost mandatory payment provider on that platform. Imagine if that strategic focus and shift and the allocation didn't happen. So, which really lead to a winning fintech strategy has to start and focus on something we call a responsive portfolio workflow. A responsive portfolio workflow takes a 3-directional movement. One we call the top-down alignment. Would anyone just say PayPal to say, hey, I am this team, we're gonna do some improvement of user experience, usability, and take some customer feedback? Will we be able to move the company to where it needs to be? Maybe, but most likely not, right? So chances are you have to see beyond today's improvements, so the top-down alignment and the vision to say where our strategy needs to be and how we're going to focus on ubiquitous versus use case expansion. And that will give the overall direction we want it to go. Now, with that overall direction, we will say, okay, what are the additional ways to grow? For example, in the case of the PayPal, what if additional ways to grow beyond eBay? So then you can tie that together, say, we want to use case expansion, we're going to go to more markets, and that bottoms up empowerment is coming out with the new ideas, new concepts. And that also require a cross-team collaboration, where we actually have to say, in the case of the PayPal, to launch a new product for beyond merchant, that would require payments and risk and the fraud and platform, all teams coming together. So that's more than just one team. And so that's really a winning portfolio workflow for a fintech company. Really had to be responsive, has to be top down, has to be bottoms up, has to work across the teams, and has to change from time to time, depending on where you are in your business. And that's really where we start the portfolio process by aligning on our goals, aligning on our strategy. That really manifests into something that different initiatives sponsored are led by various teams and support different strategies. So what you're looking at here is you can see some of the strategies or goals on the columns, right? So there are 4 areas of focus. And then you see different product areas or product lines, depending on how you name that. And they have a different focus. And then you can also see cross-team. Multiple teams support the same goals, and then one team support multiple goals. And that really is that the top-down alignment on our goals and strategy had to lead the way, because the complexity of a fintech, because there's the dependencies of each other and externally, and so on. So, and this is something, once you define your goals and strategy, what's next? The next is really to think about how you are going to support it. Strategy without resource allocation means a pipe dream. And this is where you have to think about your strategy and your resource allocation in different ways. So in this example, you can see there are 3 columns. The 3 columns you can imagine are 3 dimensions of your portfolio. A portfolio of imagine your entire product teams, and you have a different product resources to support, engineering resources and product resources to support your portfolio. The way you can look at it, it has to be multidimensional. We have to look at the segments. Is it for merchant? Is it for customer? Is it for enterprise? Is it for small? And that's one dimensional of ways to look at it. And then you have to think that way for part of the business. You also have to say, what about regions? We have the fintech by default operate globally, and ubiquitous means you need to operate globally as well. So how do you think about your US business versus your EU business versus maybe the rest of the world business? That's the term we used to use at PayPal. And that shift as well, right? Perhaps in US, you have enough product. You don't need to invest a lot this year, and you want to penetrate the EU market more because that is up and coming, or maybe change the other way around, that your US having have a new competitor that really taking a space and you want to really fight for your market share. So looking at the region, looking at allocation, by the dimension of a region is critical for you to juggle between different opinions, because each of the region are almost operated as a different business unit, right? So that's sort of like a regional view. And there's also product view, right? As a product teams, and where I want to build my product, how do we support the growth of our areas? And again, depending on the market, depending on how that tied to our revenue, how it's tied to different winning strategies. It could be how much we invest in a landing product versus invest in a transfer product, and so on. So ability for fintech to succeed when it scale, not just fintech, but obviously fintech is one good example here, is to have to see your portfolio in different dimensions and have to be able to allocate your resources against your strategy that varies from time to time. And that's really where it's a key differentiator of successful. Definitely observed very, very strongly of the fintech companies. That's not just fintech, other industries as well. But fintech, it definitely is something where if there's a strong view of a portfolio and adjust a different allocation over time, there's a strong correlation. At least from the observation is that they're more successful. The ones who would have independent product team operate independently, that's basically you have a never changing portfolio allocation. And those are the company quite often running into challenges down the road. So how does it look at? So if you, which you should, right? This is a view of Dragonboat product. And this is one of the dimensions you can see how your goals and your initiatives and features tying together. You also can see how your different teams tying together. So this structure can be more of a change in the way to represent the different dimensions you have up on the top. And then we discussed earlier, this is where the team empowerment come into play. We have our goals, and we have a higher level strategy we want to achieve those goals. So how different teams can contribute. And that's really how you tie things together. Obviously, you can use spreadsheets, but that's very challenging. That's where at PayPal we had to build something to support the portfolio needs. And that, from that perspective, you can now to look at your portfolio, look at your strategies, start to prioritize within different dimensions. In this example, we show how your strategy lined up and how different the teams and the features they're taking on, how they are contribute to these goals. And then you can also now, as you are planning, you can see how you are allocating your current resources against your previous target. So, obviously you can do this the hard way using lots of spreadsheets and so on. Or you can use a tool so you can actually easily see how your prioritization tied to the goals, how your different allocation, when we talk about the dimensions, from your plan against your previous goals. It doesn't have to be 100% perfect line, but having the ability to view it so we know, are we over allocating or we are under allocating on areas we're not performing well or we are performing really, really well. Taking another example that going back to the Square example and the block, right? They started as looking at a dongle, and that dongle will go to small businesses. And then the first a couple of years, the main focus really is about ubiquity. At the same time, and Intuit back in the days has a dongle as well, a little blue triangle where you can, for the Intuit small SMB merchants, they can use it to make payments. PayPal also launched the PayPal Here, also has a dongle, right? So there are three sort of the mobile payment product that by three companies. Square is a very tiny startup where obviously PayPal and Intuit are huge. But how did it make the change and make so PayPal Here and Intuit, a dongle, you probably don't see that very much today anymore. But Square became a huge, multi-billion company. The difference is that the overall strategy within the company is different. That the focus for PayPal on that dongle versus Square's focus on the dongle is very different. And how they move on to a different product so that they can grow up market. Over time is also different. So when you started thinking about it, is that your product strategy from a ubiquitous to use case expansion tied to your allocation across a different product strategy, across different dimension of your portfolio, and tie that into your prioritization and planning really helps company evolve from from where they are today to where they want to be. You do tie all these moving pieces together. So now once we have, we align our goals, we set our strategy, we set up our allocation by different dimensions, then what? Right? Those are, then what is, here is, it's a tricky part. It's actually fairly tricky, which is to get it done. And delivery, product and the feature of fintech is very complex. They require multiple teams, would have external dependencies. So how do you know you're on track? How do you know you're moving the needle? So you have to be able to track your work, your roadmap progress, at the same time to say, did it achieve the goal you tried to achieve? Did it achieve the metrics? Is your metric moving? So you have to look at your, the market, the changing landscape, again, fintech operates in a very fast moving market, changing landscape, and the product roadmaps, does it change anything? So one of the story going back to sort of the market, the margin boosting, at PayPal a long time ago, there was a very, very genius product manager. He came out with when we think about how we get better margin, and then one of the research and it led to this concept saying, hey, back in the days, when you use a credit card globally, you'll be charged a foreign exchange fee somewhere between 3%, somewhere around 3%, which today I think most companies waive it, but back in the days it was about 3%. Obviously, it's cutting to the margin. But the genius idea was to say, instead of having the credit card company to charge that 3% fee, PayPal as a global company has multiple currencies, so then we can do the internal exchange and making the adjustment of the books, which means we could have the user to say, hey, do you want a credit card company handle your foreign exchange fee, or PayPal can handle it for you for cheaper? So PayPal was charging 2%. Now, mind you, this 2% is 100% profit. 2%, 100% profit is a huge for business in fintech. It was a great product, and then we were getting millions of dollars, almost pure revenue because of this feature. Great story. And meanwhile, and that also gives the user a good experience, right? Because save money for user. User doesn't have to pay 3%, you pay 2%. It's a win-win for everyone. Now, there was another product team in a different space, which is in the customer success Omaha center, has said, hey, what if we just default help the customer to figure out where the country is and set a country for them, and when they make the transaction, which basically overrides the feature we have that now customer still has to pay 3% fee of the credit card company charging, and the PayPal will lose 2% of revenue. So it's a lose-lose situation where because we were observing the business metric, we realized, hey, this 1 month that we lost a couple $1 million of revenue. What was the gap hole? And that really led to that. Obviously, we could find this earlier through better portfolio planning and so on, but being able to find that earlier and then revert the changes with a good intention, but not understanding of the complexity of the product portfolio landscape, it definitely led to some of this unintended thing. So the moral of the story is that having the ability to see your roadmap and having ability to see the metrics tied to it, and then we'll be able to help a product company, complex and scaling and dependent, to see where could be the problems and what changes we could make to adjust to it. And that really lead to something where we call it responsive reallocation. So as the fintech going through various phases of the evolution, moving one focus on one strategy, for example, ubiquitous, to another strategy to use case expansion, and that's finding the next product, it takes time. So need to really invest early. Going back to the example of the PayPal, where went from just on eBay, try to achieve ubiquitous, to having off eBay. There were a bunch of other initiatives also implemented, right? Started. Some of them didn't turn out to be very promising. So having a portfolio-based approach to focus on core business and then start to invest in some of the other areas supporting certain strategies so that you can find winning products. So then you can actually invest further in some of the, proven success in earlier wins, so that having that continuous evaluation of the outcome and adjust the allocation is super critical. Now, obviously, this is something that happens in fintech space. It happens to every company. If you continuously focus on, improving your existing product and not really looking at the ways to look at the new business opportunities, ultimately the diminishing return come in, and that it's really hard to continue growth, right? So that responsive reallocation, regardless of your individual product, your product team, and the product company, it's super critical to achieve the continuous growth curve before it hits the diminishing return. So just to wrap up a couple of things. Now we talk about all these concepts of, the strategy, the top-down alignment, the bottom-up empowerment, and cross-team collaboration. And we talk about the allocation or reallocation, track outcomes, as well as track your work. How do you bring it back? How do you bring it back? And I always think about it, how our human and organizational behaviors are so much influenced and shaped by the tool we use. And this is really something that I've seen personally, as well as working with the team across all industries, to realize that when you find the right tool, you work the way it was intended that way, the behavior get reinforced. I always using example, when Agile happened, there were project management tools. There were Microsoft project. Could you use that to become an Agile company? So to run a responsive product portfolio, you have to find the right tool or facilitate the right behavior. And so that we can actually decide how we can have the organization moving along to have the best practices, and so that you have everyone adopt the process, you have everyone see the same data, so that you can make better, faster decisions, and ultimately you can accelerate the portfolio outcome collectively. So, and that's basically really kind of wrap up the prepared content, which is to win a fintech product portfolio, to win in a fintech business, to scale, you need to adopt a responsive portfolio practice and take it home with you. And if you have more questions, here are some additional resources. Dragonboat obviously is a tool for responsive product portfolio management. Dragonboat also support this organization called Responsive PPM that provide trainings and certification to anyone interested in bringing a responsive product portfolio practice into their company to grow and scale. All right, back to you.
Awesome, thank you, Becky. And we've got a bunch of questions. I think you've really started the conversation. So one of the questions that we've received is, how frequently is it ideal to shift or update strategy? Is it quarterly?
Good. So yes. So it depends on the size of the company and then how quickly impact can happen. So basically, if the concept of strategy is to help the company determine where we're going to work on, where we need to focus on. So once you decide where you're going to focus on, then you have to build a product, you have to put the market, you have to observe, does it make the impact that you intended to make or not? So typically, depend on the size of the change you will make. If you make bigger bets that take a longer time to build and ship and take a longer time to see the market involvement, you're looking at the bigger bet strategy will take something like a yearly. Now, if you look at incremental, something takes just a couple months to build, and then you'll be able to measure their effect fairly quickly. That's quarterly. That's why quite often company would have annual strategy, and annual strategy provide direction and the best. So the best will last longer period of time. And then you have a quarterly alignment and check-in to say, are we moving down the right direction? What kind of initiative we can ship and build so that we can drive the outcome? And that can be shipped within a couple of months, and then measure the result in a couple of months. So quarterly, it's a more appropriate sort of a cadence.
Awesome. We had another question. How can portfolio management help with predictability, given the interdependencies of teams and the difficulty of understanding timelines with outcome-based roadmaps?
Right. This is a very interesting. I didn't talk too much about delivery. It is very, very true in fintech. It's intertwined. I think at one point we look at the PayPal was 85 of the initiative and the features require 3 or more teams. And that's really why I built the portfolio management PayPal, which is really tie your strategy and the goal alignment and allocation with your resources. So there are 3 steps to make it work. Number 1 is you have to do a high level, portfolio level of planning, understanding cross-team dependencies, because you have a much less control of other teams' roadmap versus yours. So that's the first thing, quarterly planning, annual planning, and then later on you can do sprint planning. Those are 3, the planning is important to have, to at least know it is possible, it can be achievable. Secondly, you have to be able to view where you are. So, traditional fintech company employ a very large number of project managers, or product managers, sometimes project managers. So many people perform the project management duty because they need to make sure things are moving forward as a plan. Otherwise, they can't achieve the goal. Or you run into things like everything else is done there, 1 or 2 teams block everyone, right? So, and then that's where, and the really inspiration of Dragonboat, and also internal tool that we built at PayPal, and then really that led to the start of the Dragonboat, is to allow you to automate, to tell you, to show you where you are, predict where you could potentially be delayed, and then we'll alert you. So the Dragonboat itself, we call this like, it's 1 or 2 of your project managers building the tool that doesn't sleep and doesn't take a day off, because it does make sense to see where things are and identify issues so that we can course correct and not waiting too late.
Awesome. And then another question, great presentation. How do you effectively communicate to green teams that their resources will be allocated to yellow teams while fostering a healthy and positive culture?
Right. This is where it is so important to bring the concept of portfolio, bring the concept of a shared goals. And before the concept of portfolio and shared goals, my achievement is building something on my green team, right? Green team built for green team. And that model doesn't scale. First, it doesn't scale for any companies. It definitely does not scale for portfolio. So the way you would do is you have a shared goals. The shared goals of the company is ubiquitous or somewhere, right? So some sort of shared goals, you have shared strategy that tie to initiative that require multiple teams. So now we're not talking about which team deliver what. It's what do we deliver to this company initiative, to this the outcome we try to drive. Because ultimately deliver a green team roadmap is really feature-based. Deliver to outcome, which quite often require multiple teams, it's something where everyone can feel proud. And the outcome-focused team really looking at the initiative and the outcome the initiative is driving, regardless of which color of a team you're looking at. Versus a product manager of a green team want to say, I want to control everything on my team, and this is what I'm telling you, I'm not gonna. So see that the different dynamics, at the team level, they have a much smaller scale of the outcome to be measured, which is the roadmap output, versus at broader portfolio level, we deliver to this outcome that drives the business and the customer value.
Thank you.
Yeah.
Another question. Would you say streamlining our workflow with responsive PPM will save a significant amount of money each year on that process?
100%. 100%. If you look at the data we looked at, for example, when I was building portfolio management process at PayPal, we did a look into a lot of data, and later on, some of the consulting of other companies definitely seen that as well. Is that when the teams are not having what the first thing is, you're not working on the right thing. Going back to the example, right? We have a team in a different business area, which is customer success. They thought that they made an improvement for the user experience by default their country. What they didn't realize that it's a lot more complicated implication to the user than just the user experience on the very surface level of the default country. So when you build a product, not understanding the implication of how this user's financial the instruments being used and how it affects others, that not only user will end up paying more money on the fees, PayPal losing revenue. And there are plenty of other examples to show how not taking a portfolio workflow, you would have dependencies block each other, you would have a waste because one team builds something that's basically canceled by the others, or you cannot bring the product to market because one of the key features, key teams are not available, so everyone sit there waiting. So the huge opportunity cost by shipping something else that doesn't require dependency, or identify dependency early on, so we plan that everyone can ship the product earlier. So not having a portfolio view is a very, very costly. And dare I say, there's another company which was we work very well at eBay, where they were more run in the business unit way, they more run in a vertical way. And they didn't really adopt the portfolio management as we did at PayPal very early on. And that really had a lot of impact to their scale and growth.
And then somebody else asked, how big does your company need to be before you should take a portfolio management approach?
Right. It depends on how you think about portfolio management. That, the most traditional way to say, I have a 4 product, therefore it's a portfolio. Yes, that's one of the examples. But if you have, for example, a different dimension, think about it. If I have an existing customer, I have a new customer. How much should I build for existing customer? How much should I build for new customer? Because they have a competing needs, right? How do you decide? It's apple to orange comparison. So then if you start to think about portfolio, you say, okay, our revenue is right now, our revenue growth, new customer growth is very slow. It should be faster. And our existing customer retention is fine. So I'm going to invest more on the growing new revenue. And that is a portfolio approach, right? Taking the portfolio mindset and having your product, quote unquote, roadmap, right? You take a portfolio way, then you say, I decide where I'm going to invest in these 2 areas. Then I need to prioritize the things within this bucket. That's the portfolio approach. Now, the bigger you are, the more impactful, because the level of complexity, you have to do that. When you are smaller, 4 or 5 teams, and that's the time, right? When you take more than a couple of teams to plan, to ship, portfolio is the only way to connect the people, connect the team together.
Awesome. And somebody else asked, how do you get executive buy-in to switch to a more responsive PPM approach?
Interestingly, executives are very receptive to taking a portfolio approach. The reason is because there is always, we can see things shifting, right? And I observed prior to joining PayPal, I worked in a lot of other companies, tech companies and traditional companies. And I recognized that at those companies, product managers were sort of in this corner and then like in the R&D, and which, sort of like separate from the business, right? And the differences at PayPal, which is one of the most savvy operationally company, in my opinion, and so complex to run, product managers are very, very business savvy. And that's really easy to talk to executives, because ultimately executives are the ones who need to be responsible for numbers. So if you go to say, here's how we should think about a roadmap, here's how we allocate, and how these things are gonna drive revenue and growth and retention, it's a music to your ears, right? Otherwise, who's responsible for delivering these outcomes? There's a connection of outcome to strategy and to plan to execution. When you have portfolio management, you actually tie all that together. So the execution actually directly can link to the outcome. Without portfolio management, it's someone else responsible for strategy, someone else responsible for execution. And because they're not tying together, executives are left to be the only person responsible for delivery of outcomes. That's not a good feeling. You need the support of your team. You need them to also take part of the responsibility that actually truly can deliver the business outcome that every company, every executive is looking for.
Right. Thanks for all the questions, guys, by the way. Somebody else asks, how does an early stage company at the early stage of market fit validation look at PPM?
So this is a little bit interesting in a way. Sometimes people say you shouldn't use the PPM to look at the companies before product market fit. Obviously you cannot say PPM is the hammer. Let's look at everything as a nail, right? The concept you could take is not necessarily as a full-blown PPM way, right? But when you're trying to do product market fit, it's very similar. It's very similar in the way you are building a new product in your portfolio, right? That means you do have to say, what are the goals that I try to accomplish with a couple of a hypothesis or features we want to build? How does it measure to as things goes on? Did we progress to these outcomes or we didn't? Or you would say, how am I going to allocate resources to do multiple iterations and before I run out of funding? So these are the things you can take as a principle, not a full-blown PPM, but the principle in terms of having goals and strategy and having your initiative and the product mapped to it so that you can actually see your progress towards these goals, and you can kill the ones that didn't work and double down investment in the ones that are working.
Awesome. And then we have a question from Bob. He says, say if you have multiple product types, active usage versus anti-active use, BTC versus enterprise, free versus premium featured, how would you apply portfolio best practices to such disparate types?
Right. So first of all, we call this dimensions. So you can say you could have a different, product type of freemiums than others, and how this is one way to look at your portfolio dimension. And you obviously going to tie to them to say, what is let's say if our overall goal is to grow revenue, and the overall goal revenue to say, what is, how the revenue should coming from the two type of the, freemium versus other product. And then is that you decide how much you want to invest in, because you think one of them can achieve your goal more than the others or during a certain time frame. So that would basically give you ability to look at number one is to say, here's the overall strategy. Here's the two of the product lines contribute to that product strategy for those two product lines that contribute to this business goal. And you will say, in my best case scenario, here's my guess of how much they can each contribute to. And then how much work is required to achieve what they can contribute to. And then you can look at your overall resources and product to say how I'm going to go put it in, 20% versus, 80% or whatnot. So this is one of the dimensions. Well, I'm not saying this is easy, right? And the thought process you have in your mind, just lay it on paper. And then you look at another dimension, right? So look at your BTCs and others to say, based on this type of the product, which one we should, how do they contribute to the goal? Maybe they have a different goal to accomplish. So each of the dimension now, my recommendation is no more than 3, right? So you have 3 dimensions. If you have more than 3, try to flatten them, so that you have a free BTC and another. So then in that way, you can look at your portfolio in 3 different ways and understand each way how the split can contribute to your goal. That could be a different goal. And then you allocate there. From there, you can put a roadmap that you can flatten out to be a list.
Awesome. Moving into some Dragonboat questions. Is there a way to manage visualize those customer journeys in Dragonboat?
you can define customer journey in Dragonboat as well, and that will give you ability to plan and prioritize your features that contribute to this customer journey. Yes, you can define that into setting that up into using a custom field.
Awesome. And then somebody asked a very general question about Dragonboat. They kind of want to know a little bit more about using Dragonboat as that sole platform.
Right. So product portfolio management is something where we say it's sort of like there are two parts, right? There's the execution, there is the strategize and planning. So strategize and planning is the core part of the product portfolio management. That really is what Dragonboat is built for. And Dragonboat is very well integrated to many delivery platforms and Jira's, their DevOps and Asana and so on. So that way you have your strategy and execution in two systems and adopted by different user. Now, if you really want a smaller company, you can still use Dragonboat as a sole platform, but the main purpose really is built for portfolio management, the strategy, alignment, and goal, and the tracking and planning before sort of the task level execution.
Awesome. If there is no more questions, then I think we're good. That means you did an amazing job. Great presentation, Becky.
Thank you. Well, thank you, everyone. Great questions. I hope this is helpful. Again, you can find me on LinkedIn. I'm Becky Flint, and you can always reach out to us. Dragonboat.io is our website, and we plan lots of content, and we're really passionate about help product companies to drive business and a customer outcome. So reach out to us and look forward to hearing from you as well.
Yeah, we do functional demos every month. So I'll send that link in the follow-up email. So if you are interested in learning more about Dragonboat or responsive PPM, we do have individual demos for like transformation, IT portfolio, and product organizations, where we kind of walk you through the Dragonboat platform in more detail, and we can discuss like specific features and functionalities that can help you in each functional area so you can achieve your objective. So I will send everything in that confirmation email, in that follow-up email. So look out for that. And I really want to thank you guys for being an amazing audience, for asking so many great questions. And of course, Becky, for doing an amazing job. So thank you guys, and have an amazing Thursday.
Thanks, everyone. Bye.
Bye.